Hi, taxation in India. Well, it's still a hot topic in India. Hi, I welcome you all to the Crypto Singh Show, and my name is Gunpreet Singh. Today, I will break down about the taxation in India on cryptocurrency, where everyone is still confused about what's happening in the taxation world of this cryptocurrency. Do we trade? We don't trade. Buy? We don't sell. What exactly do we do? Well, don't worry about it. I'll explain you all in detail about taxation in India. Just to start with, well, 8% of the Indians are into crypto, around accumulative around 70,000 crores of rupees, which is a huge amount where Indians are invested into crypto. Now, the government got this taxation rule, which is 30% tax, after which we saw a huge decline on the Indian exchanges, on the cryptocurrency accounts. People closed their accounts, people realized their profits, people got out of this, and people are still not trading because of the high taxation amount involved, which I can totally understand. Well, it's a step forward to legalize it, but it's nowhere written that it is legal. It's still not legal, but it's a step towards legalizing it. Now, just to tell you how this taxation really works. So to give you an example, well, so 30% of the tax that you have to pay is actually on your profit. Now, for example, you've earned 30% profit on your Bitcoin. Say, for example, you won 10,000 rupees on your Bitcoin. So the tax that you have to pay is 3,000 rupees, which is 30% on your Bitcoin. But if you've earned 10,000 in Bitcoin and you've lost some in crypto, like maybe say Ethereum or some other cryptocurrency or Dogecoin or meme coins, you lost your money there. That can be subtracted from your net profit. So you actually have to pay 30% of your net earning in crypto. Now, this crypto asset or this crypto money cannot be adjusted against any other loss that you've had outside the crypto market. So let me be very clear. You can only you can only subtract the profit or loss or add in what's in the crypto market. For example, by Bitcoin, you have made loss in Bitcoin, earned in Ethereum, or the other way around. You could net that off and pay the tax 30% on it. But if you lost some money on a property that you bought or any other asset that you bought, you've lost money on that, you cannot set it off against the net earning or net earning of cryptocurrencies. So within the crypto, yes, but outside the crypto, no. So the government is treating this as an asset. And why is it treating as an asset? I'll explain you that later on in this video. So this is where you have to pay the taxes. Now 30% of the taxes is payable. Now, for example, you tell me that you've transferred your crypto or somebody has gifted you the crypto. Then what happens? Well, what exactly happens is the government will treat that as a gift. So you will be taxed 30%. Whoever is receiving that crypto will be taxed 30%. Now you tell me that I sent crypto to my friend and he sent it back to me. Well, the government is treating all the transactions as an individual. Any money, any crypto sent to any wallet, and that if you've gifted it to your friend and that friend is given it back to you, this in literally according to the government means you've gifted to your friend and he's gifted back to you. So when he's gifted, you've gifted, whoever receives that crypto is liable to pay 30% of the taxes. Now, please try to understand the difference here. This 30% is to be paid on the entire gift because your entire gift is your entire earning. That 30% is basically on trading on the net profit that you earned. But this is 30% on the gift that you have received. You have to pay the tax on it. Now, if I sent you the crypto, I'm not liable to pay the tax. Who has received it is liable to pay the tax, and tax on the entire crypto received by him. So this is what the gifting would mean. Now, if you try and tell me that, you want to ignore this, and all the cryptos that you are buying is from the centralized exchanges, They've got your KYC, they've got your PAN cards, they've got all your details. You can't hide your transactions, and it's a bad idea to do that. The penalty is around 300%, and I'm sure you don't want to go there. So let's ignore that. Let's not go there, and let's declare all our taxes. Well, so this is about the taxation that is happening. Now, another important point here to be noted is any money that you withdraw from your crypto exchange will have TDS 1% deducted from it. Now, if you need to reimburse or you need to get that TDS back, you need to file it in your ITR. Now, once you file your ITR, your income, and then you can get your TDS back. That is 1%. So if you take out 1 lakh of rupees, what you will get in your account would be 99,000 rupees. Another very, very important point here. Now, this rule came in on the 1st of April, or you could say 31st of March. After that, this rule is valid. Now, what happens before that? Well, if you've already taken your Bitcoin or you've already realized your profit before that, then what happens exactly is that it will go according to your tax slab in your income or ITR that you have been showing. So for example, if you have an income less than 5 lakh of rupees, you don't need to pay any tax. Now, if you have more than that, it's according to your ITR. That's how the taxation will take place before that. But please do understand another very, very important thing which a lot of people are still confused on. For example, they say that we sold Bitcoin into Ethereum. Will it be taxed? Well, the answer is yes, of course it will be taxed. Because you have realized your profit in Bitcoin and sold it into Ethereum. I mean, by this means you could probably buy Bitcoin today, sell it into Ethereum tomorrow, into Dogecoin day after, and so on. But the government says, and in general, you realize your profit as soon as you sell your Bitcoin into Ethereum or Ethereum into any other cryptocurrency. It is at that point of time you do realize your profit, and it is at that point of time that you become liable to pay those taxes in profit. I mean, if you've got profit, you got to pay the tax 30% on it. So it doesn't matter if you've sold Bitcoin into Ethereum. What matters is you've realized the profit of Bitcoin at that point of time. So how much did you buy the Bitcoin for and how much did you sell it? And that is how the money will be realized. And that again is taxable. So to be practical, or to tell you that a lot of people are still confused about this, that we're not dealing into currencies. We're just dealing into Bitcoin and Ethereum, and we're selling Ethereum into Bitcoin, Bitcoin into Ethereum. Well, it will be taxed. The moment you sell any crypto into any other crypto, it will be taxed at that point of time. So this is what the government is saying. Now, another very important part is that once you have these taxations, you pay these taxations. Now, government is actually, what has happened is, because of this rule, so much of the trading volume has dropped down, and Indians are scared to actually deal into this. But government has played this as a master stroke, because if you need to get your TDS back, which is 1%, you will have to show it in your ITR, you will have to show it in your income. So eventually you will be declaring all your assets, and they will be having more of ITRs that are being declared to the government. So it's a master stroke by the government. It's a step towards legalizing it. It's still not legal. It's not like you could go in and buy currency and, go to a restaurant, eat food, and, pay with Bitcoin, Ethereum. It's still not said that it is a currency. Now, why I said initially that this is an asset is because I don't know how many of you saw the budget, but the finance minister very clearly said these are digital assets. Now, what does digital asset means is that they are treating this as an asset. Why didn't they say currencies? Because RBI will get its own currency, its own digital currency, and they want to make it sure that, look, this is the assets that you have. currency is only one, which the RBI will bring in, and this makes it clear that RBI is going to get its currency, and that is why they will name that as digital currency and not this as digital currency. So this, they are trying to name it as digital asset. But even naming it as digital asset is a very important step and a very good step, because the government believes that this is an asset now. Now, how do they declare this asset, or how do they legalize this asset, is going to be a question in future. But for now, they've moved a step forward for it. Yes, taxation is high. Yes, I mean, TDS is being deducted, but on the exchanges, it's legal. I mean, they're deducting the TDS. You can do your trade. You can transfer your crypto. So it's absolutely legal on the exchanges to do all that. But still, I mean, there is a gray area where they have not given this as 100% legal. I know you're asking me that what is 100% legal? Either it's legal or it's not legal. Well, we're still in the middle of it. We moved towards legalizing it, but we're still not legalized it. So let's see what decisions the government would take, or how this entire crypto community and entire crypto taxation will come about. So there is a lot still going on in with the governments, because there are NFTs, there's everything going on. Crypto, of course, is inevitable that they will ban it. They move towards legalizing it, but they've not legalized it. So we're still waiting for those for it to be 100% legalized in India. So I hope this has made life simpler for you and taxation simpler for you, what's happening in India. So if you're please liking the content, do like, share and subscribe, and press that thumbs up button and like it. And we'll be getting in more videos like this, which are very important for you all to know what's happening with the crypto industry here in India. Thank you so much. Signing off, Gunpreet Singh from the Crypto Singh Show. Bye bye. Take care.